Welcome to this Killick Explains video on 10 lessons from the recent cryptocurrency crash. Now, I explained over a year ago now why I'm not a big fan of cryptocurrency. Great. So what are the lessons? Because we need to look forward and decide how we're going to learn from what's gone on. So what's happened? Well, a quick recap first of all. You hardly need me to tell you this, but most of the headline, the big cryptocurrencies, have crashed, whether you're talking about Bitcoin, Ether, Dogecoin, and so on. So cryptocurrencies have plummeted. Lenders are struggling. So believe it or not, because I find it hard to believe, there are people that were prepared to make loans where cryptocurrencies were the collateral, the security, if you like. Not surprisingly, when the value of those assets, the collateral, crashes, so does the ability to either make loans or unwind them. And the big exchanges, Coinbase and the like, under huge pressure. Okay. Now, quick recap about what was the problem, but I don't want to go over that in too much detail. Let's get to the lessons. What's the problem? Well, cryptocurrencies, and I've covered this before in a previous video, which I'll mention at the end. What are cryptocurrencies? They're not standard currencies. They're not like the US dollar. They may claim to want to replace it, but they're not like it. They're not like commodities. Cryptocurrencies are not like gold, for example, and I won't flog to death the reasons here, and they're not securities. So what were they? What are they? Well, good question. Feel free to ping in answers if you want to. Number two, their value is incredibly difficult to ascertain because we don't really know what it is we're valuing. I know there are arguments around the limit on supply and so on, but I don't entirely buy those arguments, and they're unregulated. We don't have, regulated is not perfect, we don't have an FCA or an SEC looking over the top. And for all those reasons, they are something of a risky proposition, always were and always will be. So what lessons can we draw out from the enormous price crash that we've seen at the time this video is being made, summer of 2022? Bitcoin down 72% from its former high, and so on. So here are 10. Number one, and these are fairly obvious, but number one, investing isn't gambling. And as far as I'm concerned, cryptocurrencies are pure gambles. I don't understand what they are, and that's not a lack of knowledge. I've looked at it, don't really understand what they are, and I don't know how to value them. All right. Now that leads me on to number two. Something you don't understand is not something you should buy. And these are lessons that can be applied elsewhere, in more esoteric areas of the equity market or the bonds market or structured products. If you don't understand it, don't buy it. Don't take a punt, in other words, on something where you're thinking, I don't really know what I'm doing here. Number three, don't try to time the market. You will see commentators saying, now there's resistance to a further price fall. This is a good entry point. We've got a support level, we've got a floor, all that good jargon, but all they're trying to do is to suck people into the market when it could keep falling from here. Nobody really knows. So don't try and time the market as a long-term investor in anything. Number four, don't pile good money after bad. Classic gambler's mistake. You think, well, if I just, all the price is down, if I just keep doubling up my bets, it's got to come good. I mean, how far can it go down from here? And the answer is all the way to zero, is the only logical possible answer anyone can give you to that. So number four, don't send good money after bad. Going through these fairly quickly because I have mentioned them in other videos. Number five, don't follow the crowd. An awful lot of people piled into cryptocurrency with fear of missing out, thinking all these big celebrity names and footballers and things, well, they can't be wrong, can they? I mean, the fact that they know almost nothing about investing doesn't seem to matter in these situations. But my advice, don't follow the crowd, particularly taking into account one of my previous lessons where you don't really know why you're following them. Next lesson, number six, this time isn't different. The number of times in my investing career, dot-coms, crypto, I've heard people say, no, Tim, this is the revolution. This time is different. You are an old dog, you need to get on the bandwagon because this is transformative stuff. Well, until someone can explain exactly what they mean, I'm going to sit in the corner with my traditional conventional investing ideas, I'm afraid to say. Number seven, Vital. Liquidity matters. Now, people don't think it matters. When you're buying an investment, people think, oh, I don't care. As long as I can get in now, then I'm not going to miss out on the price action, the excitement. But they forget that when markets turn, it can be much harder to get out again. So it's all very well having all this wealth in something like Bitcoin, but at what point are you going to turn it into something you can actually spend widely, such as US dollars? And if there's a rush for the exit, what's going to happen? Liquidity might vanish. And that just means you're trying to sell, no one wants to buy. All right? And that can happen in other markets too. Don't get me wrong, this is not all about cryptocurrency, but these are lessons we can draw out. Next one, don't anchor to irrelevant information. All right? In other words, it doesn't matter that Bitcoin used to be $50,000, $80,000, 20, 10. These are irrelevant price points. Don't sort of lock onto one and say, well, I'm not getting out until it gets back to that price. It may never do so. And what was that price anyway? Number 9, avoid data mining, confirmation bias, something I've mentioned elsewhere. You'll see people saying things like, well, Bitcoin's down 72%, but these random emerging market stocks are down by more. So that makes it a good investment. Now that's just looking for data to support an investment case, something you shouldn't do in any market. And finally, you may be thinking, when's he going to finish these lessons? Number 10, if something looks too good to be true, it probably is. There is no way to just make money by punting on a random asset that nobody really understands that happens to be going up, because it might go down as well. So by all means, if you are a gambler, gamble a wee bit of money, but for goodness sake, don't treat something you don't understand, which is going up for reasons nobody can really explain, as an investment. Okay, lots of jargon there, and sorry to sound a bit pessimistic, but these are all valid investment lessons that can be applied elsewhere. So if you'd like to know more, killick.com/learn is my library of fairly comprehensive videos. And then there are a couple of other places you can look for further educational sort of information. One is our quarterly flagship magazine, Confidant. Another is the guides next to me. There are 6 in total. And for those, it's editor@killick.com.